I wanted to talk about why smart money uses derivatives instead of just trading regular stock. There's a few reasons why.
Okay, well, before you do that, this is a new word, actually, right? Not to
Yeah,
most people, but I mean derivatives. What do you
right.
mean when you say derivatives?
Right. So when people hear options trading or futures trading, maybe they picture you're trading uh, a stock, let's say. That's what people think of when they think of hedge funds and investment banks. They're picturing floor traders, right, yelling at each other. It's frantic. But in reality, it's quite the opposite. It's like a library, and
Are you saying that Hollywood lies to us?
well, yeah. I mean, so yeah, you see people in the movies watching, charts glued to their screen, trading stock.
Right.
What the derivatives? You're not trading the actual asset itself. You are
Listen very carefully to this aspect of what is really happening.
right. So you're not trading the asset itself necessarily. You're trading contracts that have an underlying asset attached to it. And you're just essentially trading the price movement of that asset and the time within that contract. So essentially, you're trading anticipated movement of an asset and the time value of that.
That's a question mark. Say that again. You're trading.
so,
What was the last thing you just said?
so you're trading the time value and price movement of that asset.
Time value. Okay, well, so it's like it's. I mean, to me, right? Time is money, and money is time. There is no money. There is no contract without time. Time is the basis of the contract, meaning money is the basis of the contract. Money equals time. So all these things seem to go hand in hand. But it sounds like what you're saying is that they're using all three against each other almost. Like even though they're the same essential thing, you're how do I say this? You're taking the stock market and you're betting on it like watching a sports game.
We're thinking about risk adjusted returns. So, how much am I willing to risk versus how much am I willing to make? And options is actually better for this. Futures,
Okay, correct me if I'm wrong, just because I don't want to be wrong. That's a good reason, right?
yeah,
I don't want to have wrong information out there. Are you when we're talking about a futures contract, right? We're talking about, let's just take oil. Let's take a barrel of oil, okay? We're talking about actually taking possession, or you're purchasing it at a price that you think that price in the future is going to be different. And so if you can purchase it for today at a cheaper price than you think it's going to be then, but you're not getting it until then, right?
right.
Or vice versa. You can buy it today or and wait to pay for it until you think the price is going to be lower.
Well, the futures contract, and at least for traders, we're not the contract itself. Yes, you could buy, let's say, futures contract for crude oil. You could wait until the contract expires, and then you will get delivery of that commodity. Usually, traders aren't going to do that though. We're going to trade the contract itself and sell it to someone else for a higher price. So, an example of an asset we think is going to go up in value in the next few months. Now, futures contracts, they're quarterly. They expire quarterly. So maybe I think the S&P 500 is going to move up a certain amount in next few months. So I can buy the futures contract at where the S&P is right now, that price level, because I think it's going to go higher. And so if that does happen, it does go higher, that gap, um, each tick that it goes up, each tick value of the futures contract, which varies on the underlying asset. But you can essentially it kind of works like a stock in that way where, the higher goes the more you'd make, of course. Now, with futures is a little more leverage, so you're going to make more than you would just regular stock, which is
But I
interesting.
mean, essentially, what you're saying is, as a futures contract, you're buying it today at the cheaper price
Yeah.
and then selling it at the higher price. You're making the difference, or is it a
Yeah, you're making the difference.
you're making
Yeah.
the difference?
Yeah.
Okay.
And the goal is to sell it before it expires, of course. So that way someone else buys a contract thinking the same thing, but you already made your trade before that. So yeah, that's through the CME, Chicago Mercantile Exchange, for futures. So
But to be clear, there's an actual commodity
yeah,
in place, as opposed to the options, which is purely just a contract that some. Well, we'll talk about that, but
right.
like, who's offering these contracts? Why is this system in place? But there is an actual commodity, and if you're not careful, you could actually get delivery to you of that commodity, right?
Yeah, which if you're a trader, I really don't know why you'd want to do that, or even just a regular
I mean,
investor.
if you're a country,
If you're a country, sure. Or if you're a business and maybe you need that commodity, maybe jet fuel. Industries use futures as a hedge on their business. So if I'm in the airline business and I think jet fuel is going to go raise in price, instead of you know cutting my profit margin as the company or raising my price, I could just take a futures hedge. So it's used a lot in the corporate world, but in business world in general, even cattle ranchers can use futures. Maybe if they have, um, you can limit your loss potential. So you can
so
think
we're
of
in the
both
we're
ways.
in the realm of the big boys here. We're not really talking about the average Joe Schmo that's going to invest in the stock market or think they're investing in the stock market or whatever. You're
Yeah,
talking about these this is a fulfillment of the actual trading of commodities.
and futures is essentially trade of the world. Because if
Right.
you think about it, the underlying assets, the because futures are just macro products, so indexes to actual commodities. Now there are more obscure, exotic futures like weather futures we talked about, event futures. But generally, yeah, across the board, they're macro products. So yeah, the futures essentially runs the world and markets and controls prices because futures they trade 23 hours a
Well,
day.
this is
So
the point that we're eventually going to get to, too, is what you just said. We think, in layman's terms, the general population basically thinks the stock market is actually what is determining the economy. But in fact, it's this, right? The commodity world and the trading that goes on behind the scenes, even the trading of these options contracts for stocks, which aren't stocks themselves, they're actually nothing. They're like a bet, right? You're saying that it is actually this that affects the stock market, right? I mean, because this is the real thing. I mean, there's actually a commodity there to be traded, and then you're betting this on a sort of a real thing, which is a stock certificate.
in the corporate world, you have supply chains, of course. Not in the supply chain, there is a hierarchy, and ultimately, where is the top of the hierarchy in the supply chain? Well, it's going to be people digging the actual commodities out of the ground to make the stuff, or you know, use the stuff to
I mean, the
give the
slaves,
service. Right.
the wage slaves, or the
Well, all of us.
the child labor. You mean
Right.
all that?
Yeah, yeah.
Okay. Well, we
Free
don't want
trade
to talk
zones.
about that.
No, yeah,
To equate that to the stock. Oh no, we
yeah.
can't do that. No, no.
So
God forbid there should be a moral responsibility for the stock you buy.
yeah, so yeah. I mean, when you get into it, the commodities and that kind of stuff, the macro stuff, that really funnels down into uh, the actual companies themselves, way down the road. But yeah, you have to
So
be
it,
aware of
it
that.
directly the notion that people are participating in this really strange market is directly affecting the economy.
Yeah, I mean, think of it like this: lithium, after 2023 or 2022, it just shot way down in price. So the commodity itself, the what do you call it? The lithium futures dropped significantly in price. Now, what led up to that after was EV companies. ever since it kind of went down in their financials. So yeah, it is interesting how it trickles down.
But that, and I think the point again is that that implies that our whole point is that the market itself, the stock market, etc., is not in fact random. The economy is not random.
Yeah.
None of this is that we perceive as being random events that affect the economy or affect the GDP. Or none of this is actually random. And in fact, it really depends on a bunch of a-holes who are gambling for a living.
Well, it's not even gambling. If I mean, if look, if you have certainty based on their reports that you know,
Okay, let me rephrase. Let me rephrase.
yeah,
Okay, let me tell a story here. Okay, because it's always good to equate things to things you can actually understand. Okay, dealing blackjack, right? I'm up in South Lake Tahoe. I'm 20, 22, 23 years old. And on stage behind me, on the backstage, the headliner that night was going to be the Allman Brothers, right? And these guys are, they're down south kind of cool guys. And so Greg Allman, um, he he came, and this was during the day. It was on the day shift. I was in the back where nothing is except the backstage with the bar and the sports book, right? So Greg Allman, he gets up on stage with his local band and starts jamming with them. Nobody around to see it, but he's just, practicing. He's just being cool. And they're playing, whatever they're playing. And very, very cool. Um, but some people did know. So at the time, I don't remember what their names were, but he was this really old guy, and he was the old commissioner of baseball or whatever his title was. And then there was a professional retired player. These were really old guys, like way past anybody, anything that anybody my age would have seen. Um, and they were back there and listening to them, and they were getting drunk. And we had this discussion. I know I kept looking at that sports book and all the numbers, right? And I just don't understand it. I can't figure out the sports thing and how it can't, you have this thought that it can't be random because how do you look at these casinos, right? They're massive. There's a reason Trump's in the casino business. I mean, there are these massive things that are built on people losing bets, right? But okay, well, then how? But the sports book, it seems to most people, because most people don't consider that sports are fixed.
right.
Just like most people probably don't consider that the whole market is also fixed. It's not random. But what do I mean when I say it's fixed? And these guys explained it to me and said, it's not that they change the outcome. There's a reason that professional players and coaches and all that, they get paid so much because they're paid to follow orders, right? In other words, the whole structure of the NFL, all the sports that get bet on, the NBA, the baseball, etc. Now soccer. Soccer used to be the one that wasn't corrupt. Um, all of these are based on not a random game, right? But on the sports book. How do you rig a game? Well, and he said, we don't cause a team to win or lose. If it's obvious that the team's going to lose and there's a 30-point difference, do you know how much that sports book is going to have to pay to someone that would have taken that? I mean, it would break the casino. So a call goes in to the team, the coach gives the sign, the player fumbles, or they throw 3 touchdowns in the last 2 minutes of the game. And suddenly the point spread goes from this to this. Okay? So is the game itself, is the outcome of the game being manipulated? Well, you could say yes and no. The winner is still the winner. They didn't change that. Usually they don't. But they changed the point spread. And isn't the stock market, and isn't the options market, and isn't the futures market all about the point spread? If you can control the point spread, if you can control the amount of money that you make by betting on what the outcome is going to be according to the spread of like how much am I going to be right and how much am I going to be wrong. If I say I'm going to buy this at this price because I know it's going to go up to this price, and we know as we discussed that these people all have insider trading knowledge, just like the commissioner of baseball has insider knowledge on the sports book industry, right? The whole thing is it's a billion quadrillion dollar industry. Why? Because it's rigged, right? And when people don't quite grasp that when they're watching the Super Bowl or when they're watching, a sports game, and they actually think that it's just, ooh, my team's playing. I mean, do you not understand? What about boxing? Well, the biggest bet upon things, everybody knows that boxing is rigged,
Yeah.
right? You can't hide that. Wrestling, if you don't think that professional wrestling isn't a show, I don't know. You got to be. I mean, then you deserve to be a victim, right?
Right.
So my point here is to compare what is the difference between the way the sports book operates and the way the options market and futures market works, because it sounds to me like it's the options market itself where you're essentially betting on the point spread of what the stock is going to do. Is it going to go up or down? Well, I'm going to short it and I'm going to say it's going to go up or down. All I'm doing is placing a bet on a freaking horse and getting the odds. And you're saying then that above all else affects the entire stock market.
That's part of it. So it goes back to that pyramid. Now they have their own internal reports talking about the different industries in the macro headwinds, tailwinds. I've showed you those. So that is actually public information. So they're very upfront that this is a
I mean, there's a lot of public information that isn't public, right? I
right.
mean, that's what your course is basically. This is what they look at when
Yeah,
they do their
yeah.
stuff. And but
So you
again,
start there though, and that hires your probability to find the trade itself. But once you do, then you structure it with the options. The options tells us a lot of the underlying asset. Because essentially with the options market, the way it's priced, um, think of an options contract like a coupon. It lets you to choose to buy or sell something at a set price before the contract itself expires, but you don't have to use it if you don't want to. You could sell the contract for lower or higher price than you got it, right? Um, but with the option contracts, the way that it's priced, there's a few factors goes into the pricing. There's the expected payoff, the probability of it being profitable, the contract itself, changes in the price, and then the supply and demand of that contract. So if you combine all those data points, and
freaking horse betting.
yeah, and there's different metrics to track all
Sorry,
those
but
things.
everything
And
you're describing is the very basic structure of the sports book.
and this is more upfront, I would say, because the sports book, it's it's speculative unless you have the put in the work, I guess. As a trader, you're putting in work, but also the options market itself, on an option contract, you can see how much the market is pricing in the underlying asset to move in any select amount of days, if you know how to do volatility studies. So we can see how much the market is priced in that underlying asset to move in our specific time horizon.
Not necessarily because the stock itself, though, is up or down, but because you can see what the company is actually doing. It's what it's going to do or what it's
What it's likely to do, because
right. But there
yeah,
again, the point, we're not talking about stocks here. We're
right,
talking about how a bunch of traders in time and money and contracts, basically a bunch of gamblers, uh, are manipulating the actual stock market to cause the price to go right.
yeah. So now go back to the spread. talking about gambling is all about the spread.
Oh, spread. That's not a gambling term, right? I mean,
Well,
no.
that's kind of funny because there are things called spread trades, and they're very powerful for options and futures for that matter too. But options in particular, um, there are types of option trading structures called spread trades, and essentially, I'll give you an example. Like maybe I think the S&P 500 is, let's say it's at 600 a share right now. I think it's going to go higher than that. I think it's likely to go to 620. So I'm going to buy an option that bets on that $600 level because I think it's going to go past that. And let's say it does. It goes past that 600 level. Well, the more it goes past that, the more profitable my contract is. Now, maybe I think it's only going to go 620. So I can, or if I'm completely wrong, I want to hedge out the possibility of me being completely wrong, right? Because,
Was it like on a game show where you get extra points for getting it right?
well, yeah,
Is it like the Price is Right, or
if you hit your specific target in the way that you structure the option trade, then you can get what's called a maximum profit.
right?
And you can calculate it before you even put the trade on. You can also calculate your max loss, of course. So you know your win to loss ratio up front with options.
Just out of curiosity, because I mean, the whole point of telling people this is to stop falling for, you know, what I'm finding out there is that there's a lot of students who call themselves teachers but have no idea how the actual thing works, right? Well, it could be anything, right? And so if everybody becomes a teacher, then how do you vet who knows what they're talking about, right? So the question is, like coming into this, I did not know, admittingly, I did not know that if I was trading options, I wasn't actually trading in stock. Okay, I did not know
Yeah.
that. That's actually changes my whole perspective on how everything is manipulated and makes it even more controlled to me, right? So one question I have, which we'll get to, is why is this even allowed? Why is this options thing? This is literally a sports book put into government and called the CME or called the whatever, right? I mean, this is ridiculous that this is a governed it's part of the Securities and Exchange system. This is outrageous if you understand it. It's and okay, caveat that by saying the reason we're having this conversation is to say that if you're doing what all the gurus are telling you to do, then you're not even in the secondary market. You're in the third market. You're
Well,
in the after effects of what's happened in the futures and exchange markets. You're way over here hoping that these guys don't screw you up, right? So you have no idea what's going to happen. It is true gambling
yeah.
to put your money in stock, but at
And they
least
know
over
that.
here, you're kind of in on the beginnings of the whatever you want to call it, the planning stage of what they're going to do to the economy.
Right.
Can I ask you a question as a clueless commoner? I, what I'm hearing here, and I know nothing about this, obviously that you're doing well for yourself in the realm of the things that you know. It's almost as if it's one of those things where they have to make these things available, but the stock market was created for them to do, what they do. And then they also have the ability to say, okay, I'm going to, and as far as futures, like what's going to happen, they could actually bet on something that's going to happen and then make that thing happen.
Exactly. That's the insider trading.
And when we had I think it was the 2008, 2009 thing, the financial crisis, they were talking about bets. We were betting on things, and what were they? Derivatives, right? So
Well,
Yeah,
that's
well,
just
think,
what I kind of
think about all the terms. You're going to win. Well, oh, I lost. What is this, a freaking game? Is this gambling? What is this? I don't understand. Why are all the terms gambling terms or sports terms? Well, now you know. My point is that what Brandon is teaching, something. Look, I'll be honest with you. This is not my game. I don't want to do this. I'm not a stock guy. I'm not a corporate guy. I'm not a business guy. I'm horrible at marketing. It's why I'm where I'm at. Okay, period. But if I was going to do, or I was going to entrust my money into someone that was going to be doing that for my future, my family's future, I certainly would, now that I know this, I would certainly not want to be putting everything into a stock market situation, which is pure. And what he's teaching, in other words, is the inside information, what these guys actually use to put what you would call an educated guess or an educated bet, not just
Right.
oh, it's Tesla and I like Tesla, or it's Tesla and I hate
For
Tesla.
my money, if I was going to do anything in this field, Brandon would be the guy that I would.
Well, yeah, man, just
If I needed
this,
to make some money on something, I would consult him first and foremost.
just this information alone, and the fact that these reports that I'd never heard about until, right, that these reports exist that only these insider sort of traders use,
Yep.
as opposed to, again, what you see in the, when they flash scenes of the stock market, in these movies, the actual floor on the
Right.
NYSE, and they're just going crazy. That's not.
that hasn't
That
existed
has
in decades.
absolutely nothing to do. Right. That's all done by computers now.
Right.
Right.
Which anyone
That's
can do on their own now. I mean,
That's not trading. That is, I mean, each one of those guys were basically agents of different, right?
Yeah.
They're just, I mean, what you're seeing is now what the computer algorithm is doing in like that, right?
oh yeah.
So the notion that is what the stock market is.
You got to
again,
get that out of your head.
Well, what you got to get out of your head is that the stock, again, what do we say at the beginning of the first time is that the stock market has very little to do. The stock has very little to do with the actual performance of the company, etc. You must not look at the stock and say, "Oh, the company's doing well, so
you
the
don't wanna-
stock's going to go up." Tesla stock's going down, but yet Tesla's opening all these factories and expanding, and he's practically in the back pocket of the president. You got to be a fool to bet against him.
Well, there is. I mean, I
No, I
personally,
get it. I'm just
I
saying.
just shorted Tesla and made quite a.
I'm saying,
yeah.
this is purposeful. You're
Yeah.
smart enough to know.
I know when to do it and when not to do it, though.
You're smart enough to know when to bet
Yeah,
against.
because I shorted when everyone was saying buy it, right? After the election, all that kind of stuff, post-election. But it's not just me being a contrarian. Like, it's based on everything we talked about.
It wasn't just, oh, I like the name Elon Musk
Right.
as my horse, and therefore I'm going to buy it.
Well,
Right?
yeah, and so options, it has gained a lot of traction in the retail trader world. Retail traders is anyone trying to do trade on their own, or retail investors, same thing. So a lot of retail traders have found out about options, and a lot of the gurus have as well. And so they have corrupted and perverted how they work.
As they do everything.
Same with futures. So with both financial instruments, the gurus are going to tell you to do short-term bets on these. So I'm going to trade a weekly option contract. It expires in 5 business days. Or the futures contract, I'm just going to day trade futures, which is one of the most harmful things you could do to your profit and loss statement. So they're, the people at home that might have tried that stuff like that on their own, short-term options or stuff like that, you're not going to be able to do it successfully without the resource.
Are you saying this is not your life? Or looking at 5 screens with stock
No, I mean,
things on it?
That's why I have time to do stuff like this,
Right.
Go snowboarding or whatever.
I don't ever see you in front of. I don't ever see you.
never-
at a
Yeah.
freaking computer screen looking. Oh, look, the stock went up 5 points. Oh, it's down 5. Oh, it's up. It's up.
Right.
You'd be doing this the whole time, right?
Yeah, and so unfortunately, day trading is the first thing people go to, and they hear, besides the movie scenes, right?
But how many day traders have said, "Man, I've been doing this for 20 years and I'm just not getting anywhere"?
Oh, a lot of them are in my group now because they realized it wasn't working. So, and that's the thing because Berkeley did quite a bit. So in other universities, they kind of collaborate on the study. And it studied the behavior and patterns of day traders, and it basically showed that it's statistically impossible to be profitable as a day trader. Because think of it like this: the stock market only moves on average 0.03% every day, the S&P. So because I have some questions. I'm always like the guy at the party explaining options, trading, you know. So, people always ask me, why don't you day trade? Uh, if I have $1 million portfolio, I only make 0.03% on that. That's still quite a return. But I'm like, okay, well, think about this. You made you made X amount. You risked 100% of that in that trade to make that small amount. I mean, make that make sense. Because if you're wrong, which you're going to be inevitably as a trader, no matter how good you are, or how many researchers you have, like we use, you're going to be wrong. So, uh, the whole point with options, besides the other stuff we talked about, is you want to limit the risk, right? But when you use them in the perverted way the gurus do, you're not actually hedging any risk. You're putting yourself in risk because you're not using the instrument
You're
correctly.
certainly not doing what the insiders do.
Exactly. You're
Right.
doing short term. Yeah.
Look, there's a lot of evil shit in this world, and there's a lot of good shit in this world. And I go by the philosophy of when in Rome, do as the Romans do. Don't go. So if you're going to do something, do it the right way.
Right.
You know, whether it's good or bad or whatever, you I think the whole point here is that you cannot. I mean, if you're going to get into this, you have to leave everything at the door. All your values, all your morals, everything has to just. This is not what this is about.
Right.
You're entering into the realm of pure mammon, right? You're going into the realm of just the absolute root of all the evil that's happening in the world. Do not go in there with a conscience. Do not go in there with a notion that you're going to buy a company because you like the sound of it or because you think it's more.
So
That's
many
not
people
how
do that.
this works. And so, look, I don't. I'm not promoting anything except I hate to see all my people being destroyed because of their ignorance. I don't like that. So if you're gonna do it, at least you can go and you can do it right and hopefully do something good from this instead of becoming part of it and becoming one of them. Maybe you can actually take it, make a little profit, and do something good for other people. But if you're gonna do it, don't do it like 99% of the idiots out there. And I'm one of those idiots. You're one of those idiots. You probably used to be one of those
I
idiots.
used to be, and I talk
Right.
about it all the time.
And it's
But
okay to admit that.
right, I spent a lot what I call tuition, learning and doing the mistakes in trading. This is well before I started learning and being mentored and trading with the smart money guys. But yeah, so this, like I said, the trading gurus they're going to talk about options, but it's a known thing in those communities. That's what they call themselves. It's just a Discord server usually, and usually the guru's like, "I'm trading this, copy me," right? And it goes back to the pump and dump thing.
Pumping up.
But now they know jokingly, and they will admit this, and they call themselves degens, short for degenerates. It's like a group called Wall Street Bets, and it's supposedly organic on Reddit. But let me tell you, personally, I think it's a hedge fund running this whole thing, trading the other side, and these people have no idea. They think they're activist traders. They think they're making Wall Street suffer, and they got this
Yeah.
they got this chip on their shoulder because they think this is them getting back, right, from the hedge fund's manipulation of the market. Meanwhile, they're
they
trying to
are
do the exact, they're trying to pump and dump their options on garbage companies like GameStop. Um, and they know this is a gamble. And, I've never met one person that's involved with that is profitable. They all will admit, yes, this is gambling, and I am
Well,
a
I mean, but
degenerate.
also aren't they equally harming people as the stock market? I mean, aren't
Yeah,
they just their own version of a bad trader? I mean,
yeah, exactly.
they're like it's like they'd be the equivalent. I mean, literally, going and joining a internet social group to do trades is like going to a freaking strip mall and going to a broker there who,
Yeah.
look, if that broker was a successful trader, he'd be working for CalPERS or some big pension fund, right? The reason these guys are in these little offices is because they're basically like, oh, I don't know, they're kind of like insurance salesmen, right? They're trying to get you to buy stuff to make them, and they're going to make a profit no matter what you do.
Well, nowadays they don't even have brokers. And anyone that tells you they're a stock broker, now you know they're full of shit.
Money management or money?
There are money managers, but that's different than a stock broker. And then now they call themselves wealth managers, financial advisors.
Oh, that's much better.
I mean, they're selling financial products. They're selling you annuities and S&P 500 ETFs,
I
essentially.
mean, just the notion of the term financial product,
Right.
doesn't that
tell you?
ring an alarm? I mean,
Yeah,
come on.
I know. Yeah, and so, the reason I'm so interested in trading is because the flexibility found with it. I mean, more than any other business I've come to found over the years, of all the stuff we talk about going on in the world, this allows one to navigate these things without incurring risk. So,
You could do it from a cruise ship.
yeah, well, you could, and that's often the fantasy that the gurus will tell you.
Yeah.
You can trade from the beach. Yeah, but the reality is, the way that we trade, it's only going to take when you're starting, when you're in the learning stage, it's going to take a little longer, right? It's going to be
Well,
2 to 3 hours of work.
But to be clear, when you say the way that we trade, again, the first thing I would think of, oh, you're trading stock.
Right, but we're not.
But we're not, and that has to be front and foremost what you remember. You're not trading stock.
Right.
The stock itself is an artificial consideration. What you're trading is an even more artificial
We're
consideration.
trading.
But it's more controlled, right?
Yeah.
The price of the stock is almost the
That's the
consequence of what you're trading,
Exactly. That is the icing on the cake.
right?
And-
How many people do you think understand that?
And the last thing that we do in our research phase is look at the chart when that's the only first thing people usually do, right? They got everything backwards, unfortunately.
But I will say this too. When I went to sound engineering school, the teacher, the owner of the company, which it became Full Sail, but it used to be called Los Angeles Recording Workshop. It was like a 9-month course, at the end of which you have to intern for a long time, work for free, basically. But he said, man, he came out in our little initiation, and he said, look, those who will succeed in this and become, get hired by a good company, there's no reason you can't, because all those companies come to us for people. They're looking for the good people. And he said, keep in mind, I'm like, I'm having my first midlife crisis, so I'm changing careers at the age of 30 or so, right? And so I go to LA, I do sound engineering school. And he says, look, those that are going to be successful are the ones who you go to every class, learn everything you can about every unique thing, and those who call their friends and call their parents and call and say, look, I'm going to be busy for the next 9 months. I'm not going to be available to go out and drink. I'm not going to be home for this particular minor holiday, right? This is what I'm going to be doing. The people that have, and amazingly, because the rest of the class, there's a few older guys, and then just all these young kids who basically wanted to make beats. Right? We're learning these massive $1 million soundboards, and they want to get on and right? And I'm like, oh my God, you guys don't understand. And this was right when all that stuff was getting popular. So they spent all this money to go through a sound engineering course, learn this amazing information, how the analog and the digital. And they all, in my last class was the Neve digital $2 million, this incredible thing. And they had it set up to where the scene from the Red Line, I think it was, the war movie, Thin Red Line or whatever, the beach scene, and they had all the guns going off, and it was the most, I'm sitting there going, oh my God, feeling like, and it's because they mixed it to the point where you really felt like you were in the middle of this gun battle. It was frightening and loud and just clear as, and I'm like, wow, oh my gosh, this is what I was, getting into. But I was the only one in that damn class at the end. After he told everybody, you're going to fail and you're not going to go get a job and you're going to waste your money if you do not do what I say, and heed my word today. Guess what? Who got the job? Absolutely.
You were the
They
only
got
one.
top company, man. Top freaking
Wow.
company is where they sent me because I was the only one in class. They wouldn't have sent me there if they didn't think I was going to succeed. Because they don't want to tarnish their name by sending Sound Deluxe, the big company, a shit. So,
Right.
look, if you're going to do this course, I mean, now take that model and compare it to the people who've taken your course and who are doing the homework that you assign and sending in and actually participating. Of those
Yeah.
people, who is it that's actually making money now?
The ones that did all the work and
Right.
show up every week. Yeah.
So look, if you're just a schmuck who buys things off the internet or whatever because some guru or influencer tells you this is not the course for you, but if you really want to learn, you're gonna have to actually put the effort in, do the homework, and as silly as some of it might seem, there's a purpose behind all of it because you're actually going through these reports that we're talking about and guessing as if you were going to make the trade, and then you're going to find out, yeah, you were right because you were well informed in your guess. And if you're not, he's going to tell you, and he's kind of an asshole about
I
it.
check everyone's work, personal feedback. But what's funny is because I structured this as a group boot camp. It's a course hybrid where we have weekly meetings. We're going over the material, so it's not like you take the course on your own every week and it's kind of boring. No, we make this interactive, and I make sure I see what you're doing. So the homework when you're learning, I mean, gosh, it's only gonna take an hour a week, if not less. And for some people, they can't even do that, and it blows me away. But
Huh?
I don't understand why people would sign up.
Well, I
But
mean, it's the same thing with the trusts and everything.
it is.
People
Yeah.
they want the idea. They love
Right.
the idea of it, but do it actually. Yeah, you're not going to succeed unless you actually do something.
Right.
Right.
And yeah, you don't have to be a math genius. You don't have to be Asian like me. You know, you don't have to be a quant. Look, this kind of stuff, especially the tools I give them. I mean, oh my gosh, I mean, saves so much time. I used to have to do all this stuff manually. I mean, hours on
Now
hours.
you sound like me.
Yeah.
You sound like us.
I mean,
guy.
hours and hours on Excel on my own. You know, no resources. Just, but now, I mean, I built this with like everything I wanted when I first started and didn't have. You know, all the stuff I was missing,
feeling, man.
and here it is. But, yeah, I want because to go back to the financial advisors we're talking about selling the financial products. Now I mentioned that most people they shouldn't trade. I don't think most people should because I most people don't have what it takes. And what I mean by that is the willingness to put in the work, but also it can be a very emotional thing for people. So if you're a very emotional person, you take things very personally, probably isn't for you because you're going to be all over. Even though our system is designed not to be like that, you're still going to fall into that somehow because people are emotional.
You're gonna watch the news, and it's gonna influence.
Right, and that's what
just
people.
like any other influence.
That's what happens to people. They see a headline, they're like, "Wait, whoa!" It's like
Why
you're not
should I
seeing
listen
it, are
to
you?
Brandon? And said, no, you shouldn't listen to Brandon. You should be reading the reports that Brandon's showing you.
Yeah.
It's not Brandon that's
Showing the stuff that's coming months
Brandon
out.
is just reading reports, and that makes him an educated better. That's it.
Yeah, there's no. I mean, that's the thing. I mean, because I go back to I tell people most people shouldn't trade. Most people should just invest in the S&P. Something that you could do on your own. You don't need a financial advisor to do that. To just simply buy shares of S&P 500, which anyone can do.
It really is pretty surprisingly simple to log on to Ameritrade or whatever, and
Right. You don't need to pay some asshole, every year a commission for that. What's he gonna do? Just check the account once in a while, which you could do yourself. So that's the first thing I think people need to do around because they see stocks and investing as one thing, right? Like the movies and whatnot, but they also see it as, oh well, the only time I'm involved in the stock market is if I outsource it. And this is why, I mean, we talked about mortgages in our last recording. Well, so you have the mortgages, but you also have everyone outsourcing it to a financial manager, essentially their investment. So between those two things, I mean, I I don't see a way around the wealth disparity that we're seeing. These are wealth black holes, and it goes back to what you're saying about why would you even trade the stock market if you know all the stuff that we're talking about? So,
If you
uh,
know the stock market's, you'd want to go to what's influencing the stock market.
yeah,
And I think people really actually, when they watch TV and they watch the news and they actually think that Trump is influencing the stock market, or
they do.
they really believe that, oh, the
Yeah,
stock market went down because Trump. And there's
right.
some truth to that, but it's not because Trump's in office. It's because of what we're talking about in the background.
Yes.
All these things were planned. And trust me, well, don't trust me. Let's ask Brandon. What did the report say pre-election? If Trump wins, this would be a good bet. If whoever wins, what's her face?
You already forgot. Yeah.
Let's just laugh the whole interview. If she wins, well then go this way, right? There wasn't like, oh, Trump's going to win, therefore I'm going to vote or go for Republican companies or conservative
Right.
companies or military or whatever. No,
Right.
it was okay because of this. This is going to all these factors have.
Yeah.
But these people aren't
Oh,
looking at the
God.
factors; they're looking at Fox News.
Right. And I made a video before the election, the day before I posted. But I talked about trades, talking about both outcomes if Trump lost or won, and I had trades for both.
But
Uh,
you knew those outcomes
yeah.
way before the election because they
Yeah.
would have been in the reports long ago.
Yeah, I talked about, look, if Trump wins, I have a trade for that on. I'm shorting Under Armour. Under Armour, they're going to face a lot of headwinds with the
Because-
tariffs and
yeah.
all that, and trade, which he is a great mascot for. You shouldn't short auto dealers right now, just based on what you're seeing on the news, right? Or you should even short Under Armour now. You're already too late for trying to do that now. I mean, I talked about that in
Missed the
November.
underwear opportunity.
Yeah, yeah,
Oh,
and sure enough, Under Armour, when we look back from then, it's dropped quite a bit. I'm already out of that trade, so don't try to copy me at home.
But you didn't say it's not because Trump doesn't wear Under Armour.
Right.
It's because of so many different factors, not the least
So
of
many.
which is this sudden.
And there's some stuff I haven't mentioned on here, of course.
yeah.
I'm gonna gatekeep a little bit, but yeah, I mean, we're trying to check off as many boxes as possible in our research, and that raises your probability on top of using derivatives as your trade structure. Now, when you combine those things together, wow, you have something very powerful.
I mean, look, all three of us, we dabble in the occult of the truth patriot alternative crap fest that is out there.
Whatever that is.
How many of those people, myself excluded, are making educated guesses, are actually going and doing research and saying this is probably what's going to happen, and then 10 years later being right? Well, it's the Rockefellers, it's the Rothschilds, it's the
Right.
It's just the same.
Yeah.
I mean, it's kind of the same thing. If I listen to Alex Jones, I'm going to have a lot of really bad information.
Yeah.
If I'm basing my decisions on that, well, then I'll probably end up in a hole in the
yeah.
Ozarks.
Yeah. If you listen,
with a bunch of canned food, and
Yeah.
and that'll be my life, right?
Look.
Because I've made the wrong choice.
I think the biggest red flag, whoever going to learn trading from, they shouldn't be in the marketing business. So if they're constantly on YouTube, I mean, every week, every day, possibly, which a lot of these guys are, or they're constantly on social media, that tells you they are not actually in the business. You see me, I'll post a video every few months and disappear because there's a lot of stuff I don't want to talk about publicly.
Clear sign that when you see these people constantly, then they're probably not people that you want to.
Then they have
No.
influence. They have to advertise. They're advertising it's like cult of personality.
If the market happens to fall, my shorts will benefit from that. If the market is going to rally, my longs will benefit from that. And that's kind of why option contracts came into the market. This is really a tool for investment banking.
It's a tool for, like I said in the beginning, it's a tool for professionals,
Right, and that's
not
yeah,
for the average Joe Schmo that's just couch trading.
right. And that's why those guys are going to be the profitable ones, and the other ones are going to be the gamblers,
So
right?
again, doesn't it make sense to do or emulate what they are doing and not what your local YouTube,
Right.
influencer is doing, right?
Yes. So it's very methodical portfolio management. We're not like you said, we're not we're not picking a Tesla because we like it, which a lot of people do. Um, but yeah, that's the thing. So, you know, we're not only hedging out the risk of up or down movements of the market itself with that approach, but just in case something like a black swan happens to come in, whole market drops and all risk models are rendered useless after that, essentially. But with the long short portfolio, your shorts would actually outrun your losses on your long side. So that it's just an example of why options were introduced into the stock market. Now, option contracts, they've been a legal instrument for a long time. I could use an option contract on real estate if I want. Maybe I found a property, let's say, worth $5 million. Maybe I don't have that 5 million, but I can approach the owner with an option contract saying, "Hey, a year from now, I can buy this property at the set price a year from now, and you can't sell it, and I will pay you this amount for this contract." Maybe I give him $10,000, and I can find investors. I could call up 10 guys and get that 5 million if I need to.
I bet you it's been around as long as the sports book, the
Yeah.
modern horse racing system.
Right. And futures, they've been around a long time too. It goes back to the old tulip futures event that happened a long time ago. But so yeah, we're thinking about all this at once because yeah, I mean, besides just the degeneracy of the retail traders, they're not thinking about stuff like that either.
But there again, are you really thinking? I mean, or are you saying, okay, is this number positive or negative? Okay, if it's positive, well, then I'm going to go that direction. If it's negative, I'm going to go that direction. You're not really thinking, oh, I wonder what that Tesla is going to say next, right? No, the
Right.
propaganda part is for the masses, right? What you see on TV, that's for the masses. But
Right.
this, you're going by, the decision you make today is based on a report from a month or two ago, right? It's not just the normal, it's not what's happening right now.
It's a combination of data points which can be in reports and other things.
But
And
that's my point. They're
yeah.
data points. They're not like Brandon thought of this.
No,
No,
no, not at
no.
all. Yeah, we're not trying to get like there is an aspect of creativity, but it's not like I'm just randomly, oh my God, I had inspiration. I'm gonna short this company.
Right. To be an expert at something doesn't mean you created that something. It just means you
Yeah.
know what to do with it.
Right. So yeah, and besides just
And you can use events of the past, right? You can look at a situation and say, this happened in this percentage of a time and then this happened.
there is some of that. There is some of that. It's not because a lot of people try to do that kind of stuff. They often call it back testing. The problem with back testing is history is just not going to repeat. It's
Especially now where
They call that back testing.
everything
Yeah.
is new all of the
Yeah.
time. There's always something new and better
Right.
and improved. So yeah, you might
yeah,
not want to.
because now all these online gurus, these trading gurus, are now promoting because they figured all the other scams stopped working. People figured it out. So now they moved on to the new scam, which is we back test all our strategies and look, it shows that if we use this strategy the past 5 years, we could have gotten X amount. Okay, but the problem is, what's to say that's going to work in the future? I mean, there's so many different factors that comes into play because now you had different macro tails and headwinds back then, and it's completely different from today.
Do you have proof that that's what you did?
Right. That's another
Can you
thing.
show me? Did you write it down 5 years
Yeah.
ago and say, if we did
Well-
this, let's open this and fight. It's a time capsule. Let's see what. No, you.
No,
just-
they never do. Yeah, they
Yeah,
can never do that.
These are. I mean, that's a great sales tactic. I mean, don't get me wrong. It's
Yeah.
clever.
So, I made a video about.
I mean, how many times can I say that in life? God, if I would have just done this. That is probably the most non sequitur point you could. I mean, I could
Yeah.
just go back to any stock or any whatever
Yeah.
and say, okay, this one has gone up a lot. So I'm going to say if I would have bought it then.
You could
I mean,
make,
that's the dumbest argument I've ever heard.
you could draw all sorts of correlations and try to say, well, if this happens, this is going to happen. Yeah.
Okay, but can they then point to their members like you can and say, this is what they've earned so far, and this is the comments they've made? And
Yeah.
you can tell the ones, and you can tell the ones that actually participated and the ones that weren't, and they're the
Right.
ones that are making.
Yeah. So, I'm really battling a industry of misinformation, just like my other work. So it's
Tell me.
and some people have they raise ethical issues with it. They're like, well, it's immoral to short companies, and you're just doing what the greedy hedge funds do, and they ruin America. Blah blah blah.
That's what we're trying to say. There's no moral compass behind this
No,
in the first
not at all.
place. So to say that is all, again, it's a non-starter. It's
Yeah, because
you're virtue signaling.
we're not even trading the stock itself. First of all, second of all, shorting is rooted in having a view on an asset, right? A view on an asset is amoral. I mean, that's what it is. And when I was a child, I remember we went to the store in the mall I really liked, and the owner told us they were closing. I remember being so upset. I think I even cried. I was,
Was it Hot Topic?
yeah. It was some Asian store. It's just there's. Oh yeah, yeah, something I clinged on. Not necessarily anything specific. But I think people they take it so personally like that. Like, oh my God, you're shorting McDonald's, or let's see, people are probably less passionate about that. Yep, people are less passionate about McDonald's, but maybe, God, I can't even think of anything. But
You might be surprised, man.
a GameStop, you're shorting GameStop,
The sacred cow.
right? And it's just like, look, I just have a view. So yeah, I mean that's another thing when people hear that, oh, we're shorting, we take some shorts. Oh my God, that's
I
immoral.
noticed the local GameStop is no longer in existence. Why would it be if every game is now
It's all digital.
digitally transmitted to you from Microsoft
Yeah.
or whatever, or Sony?
Right.
Just download it from the source.
Yeah.
Yeah. And but this online community of the degenerates I was talking about, the retail traders, they fell in love with the company GameStop. That's one of them.
What, didn't they make movies out of it? I mean, didn't they
Yeah.
really promote it to be?
Yeah.
So, I mean, you got to think, if that kind of money is being put on propaganda for something,
Right.
it's probably not a...
Was that a psyop? I mean, I didn't.
Oh, totally. Because the whole psyop was if you join this, if you become part of this movement, you will get back at the greedy hedge funds trying to ruin this company. Because the whole thing started, I mean, this is the official story. I'm not saying it's true, but the official story to them is we took part of this movement because we see that hedge funds are shorting GameStop. They're trying to end this company. That's what they think, right? No, they're just having a view on the company. That's going to do bad. And so these retail guys, they teamed up together on a forum on Reddit, and they're like, okay, we're going to do the opposite of what the hedge funds are doing. We're going to, instead of buying put options, we're going to buy call options. And we're going to do that in mass and try to manipulate the stock. So they knowingly try to manipulate stocks all the time.
Wasn't there another player in there? There was this other. It was GameStop, and then there was like another.
There were other companies like AMC theaters, just shit companies.
Let's fight the immoral behavior with other immoral behavior.
Well,
We can become our own influence.
as if it would work. Like, first of all, and what they didn't understand was that they were giving those guys liquidity doing this. I mean, God, can you not see it? So, but yeah, and that goes back to the gambling, because they a lot of people I know, they took part of that just because they saw someone else online do it or their friend did it,
It became a meme.
and now everyone's an options trader all of a sudden.
Everything's a freaking meme, I'm telling you.
Yeah. So my point is,
Truth is now a meme.
right?
People wear truth on their hats or their shirts, but have nothing to do with it. I mean, who's that going to affect? It's going to affect the uneducated investor
Yes.
who has no idea how to hedge against such a loss.
Now,
Screw the propaganda machine that's going to come in and restore consumer confidence, right?
Yeah.
Buy our products, even though we're the worst company on earth. No, you're not in that. And that's, I think,
Yeah.
the whole point of this is to protect yourself from that.
so yeah, I mean, any one of us nowadays can trade options or futures. It's not reserved for the investment bankers only. Not like it used to be way back decades ago. A lot has changed And a lot of the smart money guys, they've left the institutions and just went rogue, which is quite common now. You don't need 4 different monitors or Bloomberg terminal or a tech savviness. You don't need complex algorithms. Get access to the Quant Traders Black Box Bundle Kit, your complete guide to navigating the 2025 market landscape. We're talking about black swans and options. Now, another thing you can do if you are a long-term investor and you're worried about risk, you can actually use, because we talk about using futures as hedges, which, yes, you can do. It's a little more complicated, so I wouldn't recommend you guys start doing that. But you can use options as a hedge, too, if you're a long-term investor. So maybe, let's say my portfolio made, well, the S&P on average gets you a return of 8% a year, right? Well, now it's closer to 10. I could spend, let's say my portfolio made 30% last year, because the S&P last year made about 25%. I could spend 5% of that portfolio value. So let's say it's 100,000 in my portfolio. I could spend 5% of that 100,000 and completely hedge out the downside risk in that portfolio. So if the market does drop, there is a black swan event. My short trade is going to.
You're going to make so much money based on the loss of the entire market. Where's all the value in that market going? It's going in. Well, why
It's
do you
being
think
transferred,
markets
yeah.
crash all the time? It's because they're stripping the wealth from the market.
Yeah.
Let's start over. Hey, now we can raise the price artificially up, and then we'll strip it again. We'll call it
Yeah.
a crash or a depression or something else. All you're saying is, okay, well, we're going to be on the side. You're going to put a little money towards the side that's going to steal everything from everybody's pensions and shit. So, and then that'll hedge out. You're making so much money because the entire stock market is being drained.
Right.
And so you're going to make a lot of money on your hedge.
And, the point of the hedge is kind of like if I go on a snowboarding trip and I buy injury insurance, I don't have it planned to be used, of course. I don't want it to be used, but I'm going to buy it as insurance, right? Well, that's kind of what a hedge could be if you're a long-term investor with options. So it's kind of cool. I do talk about that as well.
Now, do you ever bet that you're not going to get hurt when you go snowboarding?
Yeah, I do it all.
Essentially what you're doing.
I do it all now. But now in my trading group, of course, we're not investors. We're trading, but in the long short portfolio we're implementing, it's not like we're doing it just because the possibility of markets dropping or falling or whatever. We're doing it because we're specifically finding assets that we think are going to go down in price, and we're finding assets that we think are going to go up in price, and we're taking positions in both. We're not just doing it trivially. So yeah, it's that's because our whole point as a trader, if you call yourself a trader, you should be able to judge it if you're able to outperform the S&P or not. If you're not able to, you should probably stop trading, because what is the point?
So one other difference between what you're doing and what other people are doing, let's face it, a lot of people are like, well, why don't I just do what Warren Buffett does? It will, I'll be great, right? But you're not actually. One thing I noticed is you don't make it easy for people and say, look, you can just follow what I'm doing. You don't make your own trades available to people and say, here, do what I'm doing.
I will share sometimes, like, just to inspire people. Like, this is like an example.
Right.
But I'm not going to share my entire portfolio. I tell people, look, this is unlike any other trading group out there, because all of those guys, they're going to tell you, copy what I do right now. I'm telling you to do the opposite. Look, come up with your own trades. I don't want you to be dependent on me. Like, first of all, if you're just copying what I do, you're not even a trader at that point. You're just literally pressing buttons. You're not thinking for yourself. So my whole point is for you to understand, first of all, how this whole thing works, and then how to find your own trades.
But isn't it also safe to say that if you are doing that, if you're telling people, hey, you should buy this and do what I do, chances are you're defrauding people and pumping and dumping, or, hey, there's this great penny stock, buy it. Meanwhile, you bought it a month ago in expectation of it going up because all these people are going to buy it because you're telling them to. Why would you tell people? If you had a massive audience and you were doing this kind of trading, you wouldn't necessarily want to tell people what you're doing because you don't want to influence the market in a way, sudden trading or extra trading in the market. That would actually be a you're not you're not basing your trades on what other people are going to do because you say buy this, which
Right.
is basically everything I see out there.
Everything. Yeah. That
It,
that is
it's
the trading education industry in a nutshell.
you can get in on this multi-marketing scheme essentially,
Right.
and I'm gonna be the real winner. You're gonna have maybe a small gain or a loss, right? But I'm gonna be the winner. Well, that's not
Yeah.
not in any way what's happening in the game.
No. And like I said, look, my point is not to be right all the time because inevitably we're not going to be. So knowing that, now it goes back to the risk reward we talked about, risk adjusted returns. How much am I willing to risk versus how much I make? So now we're trying to check off as many boxes as we can with the data points to raise the probability of our trade being profitable. But when you structure with options, on top of that, then you can layer it so that, okay, maybe I think stock X is going to go past $100. I'm going to buy some call options on it. Um, but, and I think it's going to go up to $120 a share. Now, if I'm wrong, I can place another leg of the trade going against my position. So if I am wrong, I missed the mark completely. That hedged position, that short leg, will actually become profitable and cut some of my losses. Now, if you layer the trades, because of course, we diversify. We're not going all in on one name or industry or whatever. It's very methodical, but uh, you only need 3 out of 10 trades to be right on to be overall profitable with the risk reward because we're trying to make we're risking $100 to essentially trying to make $200 to $300,
You're
right?
minimizing your losses so much that you don't need to win more than 30% of the time.
Yeah.
Well, you're gonna win the
Right. But typically it's pretty easy to get above 30% once you're good at this. But yeah, even if worst case you're not.
Well,
Yeah.
that's the risk reward factor.
Hmm.
That's what you have to decide.
Yeah.
You could probably get to the point where you're right most of the time, but you'd have to lower how much you can actually make. So it's
Yeah. Yep.
kind of it wouldn't really make that much difference.
And that's a hard thing for people to wrap their minds around. Like, wait, I'm gonna be wrong. Like I have losing positions. Well, yeah.
Well, we talked about that. When you see Nancy Pelosi or any of these insider
Yeah.
trading congressmen have a loss, you don't think they planned that? I mean, come
Right.
on, they're insider trading.
But yeah, with the spread trades, you can really limit your losses. And when your winners run, it's gonna go past the 100% profit. Our goal is to make, I think even 200 is small. It's high probability. 200 is high probability, but we're trying to get at least 3 oftentimes, or even more. So the whole point is let the winners run and cut the losers soon. Now, this is a multidisciplinary thing, so yeah, and that goes back to the emotions. A lot of people they get emotional once they see a loss or a win and a loss here, and then they're not removing themselves and seeing it.
This reminds me of a conversation I was just having last time I was home with my brother. My brother and me are we're a lot alike and we're also very different, right? And we're having a discussion on poker because I love the game of poker. I think poker's a fascinating look at the full picture of society because you got a bunch of people, they'll even wish you good luck, but secretly they want to take everything you have. It's very competitive. They don't want you to win. Of course, I know I don't want you to win. I'm playing against you, right? So my brother, his opinion is no, you should put your money in every hand and eventually the hand's you're gonna pay off, right? And well, God, why would and I'm like, no, when I play poker, I'm folding probably 80-90% of my hands because you don't want to play those bets that you're gonna be tempted to play, right? Something's gonna trigger you. You're gonna get maybe one little pair and you're like, oh, if I got 2 pair, maybe I'll win. And you keep doing that enough and you're going to lose. And trust me, the professional players call them 9 to 5ers, man. They come in every day, they play 9 to 5, they throw away 95% of their hands, they play the big hands, the pocket aces, and they win. They walk out of there with, they might double or triple their money. They might only make, 50%. But because they played safe, they were always throwing away bad hands, they were not taking bad advice, they win. They're hedging their losses, right?
Yep.
Because otherwise the winnings would have been less than the amount of times money they would have had to put in to see what's going to happen. Well, sure, it went down a little, but maybe it'll go back up. But how many times have you sat there and watched a stock go, and then say, oh no, it's going to go back up because I've got the inside information, right? It's the
Right.
same thing.
And yeah, it can
Protection.
it can turn into a roller coaster for people. They get greedy and they're like, I think I can make more. It's like, no, and that's why we do our studies and we try to figure out, okay, based on our data points, we think the stock's going to move X amount, just based off the volatility studies and all the other stuff. So when you hit your target, you have to take that win off, or you have to take. But so yeah, that's the thing. You have to have discipline. Um, and unfortunately, the gambling mentality of it is just let my winner run as much as it can.
Yeah, but I mean, you also cannot dismiss that it is gambling. That's the thing. You have educated gamblers. You have card counters. Why do the casinos don't want card counters? Because they're going to probably win, right? They have the odds. They have the inside knowledge. They've got it down to the last hand. They know there's only tens left in that deck. They know, so that's when they put their money out. That's when they invest. They have the information, right? That's why they have this intricate security system that watches every player to make sure they're not counting cards, because you can tell the way they're bet. The player that wins is always changing their bets and hedging the losses, right?
Right.
It's the same in every type of situation. If you're not hedging your loss, you're not going to have a win. Just like the sports book, they're covering the odds, they're covering the point spread. Now instead of a 30% chance of winning, you have a 55% chance of winning, because you're not only counting the cards, you know what's coming next, you have a good idea, but you're also betting $5 this time, and then next time, okay, I'm going to bet 500 and win. Next time I'm going to have $5. The whole point, I think, that we're seeing over and over is, do you have the inside information that is going to give you the best educated guess or bet, right? I mean, that's ultimately what it is.
It's a hypothesis.
And then
all of our trades.
The other side of that is, are you making sure that you're controlling your losses, right?
So, I told you we know our max loss and our max reward before we even put the trade on, right? So you have to be comfortable with that maximum loss when you put it on. When it comes to options, it's just like if I'm a retail business and I have to build some inventory. Well, maybe I have 10 different products and maybe 3 sell really, really well. I get really good profit margins on that versus the ones not doing so good. So I'm gonna not buy any more of that, right? And I'm gonna, so yeah, it's just like managing inventory, and that's why, because a lot of people, they treat trading as a hobby, or gambling, when if you run it as a business and you look at these positions as inventory and look at it in that mentality, it's gonna go a lot better for you rather than just jumping from one thing to the other based on the news cycle. I mean, you're gonna experience that roller coaster.
I guess ultimately, in the end, also this is an active and not necessarily a passive venture, and I think that needs to be said.
Definitely not passive.
Not something you're just gonna set and go. But I mean, the cool thing about the way the system works is that you can be active by setting the price you want to sell and setting the price you want it to go to before you sell, right?
Yes.
So you don't actually have to watch it necessarily.
No.
But you cannot be inactive. It's not a passive game.
Yeah, I'll share the schedule on the screen, but yeah, I mean, it can be 5 minutes of work per weekday. On the weekends, usually I like to do my trade research on a Sunday, hour or two a week, and that's really all it takes. Once you get going. Now, when you're studying, it's only gonna be, at least in my boot camps, it's gonna be an hour a week of learning. So my whole point was I wanted to build it so anyone can do it. Everyday people, because yeah, I think the misconception is it's only for the institutions. Just like our other work that we've talked about, a lot of people think trusts were only for wealthy people. Well, look, the way the way things are going, I think the viability of value investing, like Warren Buffett is a advocate of, I think those days are not necessarily over. I just think you're not going to be as successful as he was doing that in that time period, given everything now. A lot of people, when they picture trading, they think like, oh, I'm going to need 5 monitors. That's for day traders, and we don't day trade. Day trade doesn't work, right? So why would you need 5 monitors? The answer is you don't. Now, I personally like to have at least 2, but you can get away with just 1. Because again, you're not watching charts all day. We're just, we do some stuff on Excel.
Drive yourself crazy if you're watching charts all day.
Right, you will, and that's a sure way to lose money, because then you're gonna turn very emotional.
Way to lose your mind,
Yeah,
I mean,
really, yeah. And who has time for that too?
Well, people don't have time for anything else, and that's
the scary thing. Yeah,
that's when you're putting way too much time into this, right?
Exactly. Yeah, if you are waking up every morning right before market open, or even then, and you're all excited, you're gonna trade, like, you're already losing. Because
the other thing is, as you're watching that, you're under stress, because that the only time you're actually going to lose is if you sell on a loss.
Right.
And so you're constantly going, oh, please, please, please go back up. Don't. Should I sell now? Should I take the loss? Right? So you're just constantly concerned with something that is inevitably going to do this. It's like a speaker going in and out. It's just it's a sound wave. Don't pay attention to the sound wave unless you're betting on that little wave for that little second, right? But
you put in your settings, and then you just deal with what happens. Like, how often do you actually have to go in there and I really need to make a change on something?
Very rarely, maybe like once or twice a week. Yeah, it depends, because depends how big portfolio you got. But if you got a full book, full portfolio, then it might take a little bit, but usually it's like 5 minutes at most a week, just clicking stuff. But yeah, with the online brokerage platforms now, I mean, it's basically just a desktop app that you're using. You can even use your phone. Not that I recommend that. It's a little dumber that way. But the online platforms are so easy. I mean, I show you guys how to use it, but it's minimal work. So you can even place orders for trades overnight. So maybe if I see an option trade that I want to place, I can just place the order, and next day it might get filled. Now if the price of the stock changes quite a bit the next day, then I might have to put in a new order. That's fine. Very easy to do. But the whole point of this is, and the pros, they don't wake up, 9:30 stressing out like the retail guys. No, they place their orders already. Once they have their trades on, remember, we're thinking multiple months here.
The contract itself is easy. I mean, you're basically saying, okay, how much are you? The contract is worth this much. How many do you want? Oh yeah, one contract for what, $500, right? And what do you want to sell it at? Beep.
Yeah.
What do you want to sell it at if it's at a loss? What's the mass loss? Beep, and you're done. And the computer's going to sell it or it's going to notify you, hey, it's at this point. Do you want to sell?
Yeah. Or I'll do it for you.
You don't have to do any work because the computer's watching it for you. If it goes down here, it's going to either automatically sell or notify you should we sell, right? I mean,
Yeah.
you don't have to do anything.
No, and the way the business is now, I mean, it's so user friendly. Anyone can do it. You don't have to have fancy algorithms to do it for you. That kind of stuff. No, and and we have a lot of people that run full time businesses or work a job. Because yeah, this doesn't involve you having to be active during market hours.
Nor does it involve you watching the company or the stock. I mean, it doesn't really matter so much because yeah. I mean,
You actually don't have it. Yeah, it is. I love it because it's so different than what people are picturing.
Yeah. I do have one thing that I want to get clear here because I really do question the sanity of all of this. Why is this a government sanctioned and regulated thing? Who the hell is offering an organized criminal syndicate of betting against and for the stock? That sounds really messed up to me. How is that a thing? How is that a legitimized? How do they legitimize it? How is this possible that this is the way it actually works? Because to me, this is like, are you kidding me? Yeah, it's like the most ridiculous thing I've ever heard.
And that's why I laugh on the notion that economic collapse and all this kind of stuff, all this fear rhetoric. It's just like you don't see it, do you? I mean, the system is already cooked. So I'm not worried about World War III emerging, or, markets taking, that kind of stuff. Dollar collapse, and look,
Trump saying something stupid.
right. New tariff announcement. When you're involved in markets on this level, you're immune to all the headlines, basically. And a lot of times we're using the headlines as liquidity. The Chicago Board of Options, they're the ones.
The company.
Yeah, and they have a stock, just like CME,
right,
that runs futures. So yeah, CBOE fulfills these contracts. They, based out of Chicago, of course. It's.
But I mean, like, who's offering the contract? Where is this contract coming from?
That's coming from the market makers.
But they're the only ones that can offer the contract. I can't say, well, hey, let's. Why can't I start a company and offer contracts? Because that means that it's an organized betting organization of government.
Well, yeah, because look,
that's special treatment. That's not equality.
And not all companies have options. A specific level of market cap. Then usually they have options on the stock. Not all the stocks have the options though. But the ones that do are typically they're typically going to be more traded when they do have options. Just because, well, I was telling you, the smart money, that's all they're doing. They're not trading actual stock.
Wait, did you say smart money?
Yeah.
Old money?
That's the same thing.
Smart money?
Yeah.
So in other words, the stock market is for fools?
When I say smart money, I'm talking about hedge funds and investment bankers.
Yeah, but I mean, really, because we kind of discussed the stock market is the stock market moves based on what happens in these markets, right?
Yeah, so I guess in this context, smart money, what I mean, but yeah, the old money.
I mean, if you're
type.
investing in the stock market, it's not long term, then it's
if you try to trade or invest on your own, they call you dumb money because you're not. I mean, yeah,
it's like
dumb money.
It's like representing yourself in court without a lawyer, right?
Right, is exactly, and it goes back to the GameStop thing, right? All that online movement. The movie about it on Netflix that they're all in love with is literally called Dumb Money, and they celebrate it.
Good point.
Yeah.
Good point. I'm gonna have to watch that now.
I know, right?
I mean, did you see the movie?
No.
It's called Dumb Money?
It is called Dumb Money.
If it's going to be misleading or...
I think it will. I'm not sure, but just because I know how misleading the movement is, I know for a fact they're going to put some of that narrative in there.
Maybe there's a hidden message in there, like not so much GameStop. Stop the game.
Stop, maybe?
Yeah, I haven't seen it yet, but yeah, maybe we should do a review of that.
But I mean, I seriously I'm sitting here going, how is this a legitimate business operation, and how is it
Oh my God. When you realize this is how it all works, you're like, wait, why isn't I mean I get why the public isn't privy to this,
open secrets? I know that they're
but
all over the place.
it's just like why isn't everyone doing this?
It's amazing when you look, especially, and the scariest thing to me is the derivatives market. My God, it's like I don't know if they have made a number big enough to cover what's past quadrillion and
All I know is it's a $3+ trillion market every day, changing hands through multiple trillions. So yeah, quadrillions is probably getting
see
into.
the average person that you tell that to, they're like, but there's not that much money in the
Right.
world. There's not that much in stock.
Oh
You know,
gosh, yeah.
it's not worth that much. How can that possibly be? Yeah,
Right.
well, that's
So yeah, we're not trading MBSs here.
You got one less person they have to worry about.
well, if you think about it, actually, I mean, that's kind of also, you could say that Bitcoin is in that class where you're valuing it on the value of something else and then saying it has value.
right.
I mean, that's basically all
That's
these
probably the
securities are,
biggest, yeah. And
except there's no security.
right, that's the thing. There's nothing that, yeah. There's no underlying asset. Well, I forgot to mention about options. Because we're talking about stocks versus options, right? Why would you trade options versus? Another reason is, let's say the stock moves 50%, which I'll show on the screen. A trade that I shared recently in the group. The stock made a 50% move in our time horizon of the trade. However, the option contract went up 300% in value. So on that small of a move, which is a big move for a stock, 50%, don't get me wrong, but you can make so much more just because the option can make so much more than the actual stock.
And can you tell us why that is?
Yeah, the supply and demand for that strike now is so much more increased because I bought at this level down here, and in the stock, went up 50%. So now this level is way down here, way valuable. So it's high probability that by the time the contract expires, it's still going to be down here, still. So I can sell that contract as is. To someone, trading a weekly option. I'm getting out being months ahead while someone's buying that. So
So you bet on the right frickin' horse.
yeah, and
What with the odds?
if I'm wrong, that's okay. I'm okay with losing 100% of that, which you don't have to lose 100%. I mean, you could take it off if it loses 50% or whatever. You can set it like you mentioned. But yeah, you don't want to be too tight of a stock though, because you'll get stuffed out.
But you also don't want to get overconfident because you had one success.
You don't want to get overconfident. You don't want to trade the same thing over and over. Like I see a lot of people like, oh, I had this amazing trade, so I'm just gonna buy more options. I'm like, you got to know when to move on to the next opportunity.
I was trying to think if there was any other aspect of this that. I mean, I hope that we got across to people that, like just about everything, nothing is as it seems. Because I mean, like I said, I'm learning new stuff all the time, and the notion that the options market, like I said, is that you're not actually trading in stock, you're trading in time, basically, or predictive future. I mean, that's amazing to me that is how it actually works, and it's not so much I didn't know that, it's that I didn't consider it. Like, why would you think? My point again is, why would you even think that that's the way it is? Because that's so screwed up. And then to imagine that that's what's manipulating the actual stock market months later.
Yeah.
I mean, I really think people need to think about this before any kind of investment. You need to look at what the pyramid below it is, because I mean, this is the epitome of organized crime, organized government crime, right? I mean, it's kind of a holy shit moment for me, because
Yeah.
I didn't really understand this. I thought I did, but I mean, if you're trading the market itself, then you're late to the party. That is such weirdness to me. I don't know what to say. I hope people really get that point.
Yeah.
And that what you're teaching them is to go in before that and, actually work on the information that other people have way before, it's ever going to touch the news or not touch the news for that
Yeah.
matter.
Because when you're looking at the chart, the stock chart, you're looking at what already happened, right? So if you're trying to work off of that, it's just
Yeah, that's
not
a
gonna
good point.